let's get right into it. Pretty wild. PACW. How amazing, like how incompetent can the management of these banks be that every single time interest rates go up, one of them goes out of business? Interesting times. I mean, it's just like, where does the management come from? Whether it be Silicon Valley or First Republic or tonight PACW, it's like, how absolutely incompetent can they be? But I mean, I guess that's what happens when people get hired for reasons outside of their abilities or their skills, and that's the world we're in. But hey, it is what it is. That being said, right off the bat, Zach asked, is there a difference between the weak open red to green and the 945 dip and rip? Yes, many, 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 many intricacies. Okay. Now, one of the things that I constantly struggle with, okay, is like I'm guessing Zach is probably on pre-market prep, and he'll hear me say weak open red to green and go to the next stock. He'll see me. I'll go to the next stock and I'll say buy in pre, sell in pre, and go to the next stock. And then I'll hit another one. I'll be like, whoa, 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 hold up, 945 rule on this one. Okay, now it's, and I don't say this to complain, but there is. I use a lot of acronyms and I call it like shorthand. Okay. I mean, everyone knows what shorthand is, right? So by naming these setups, by giving them names, attaching times, etc., it allows me to answer as many questions and go through as many tickers as possible. Now, what gets lost, especially when you're here for the first time, you're like, well, wait, why was this one? Why did he relax the 945 rule on this one? Why did he say no, harden, like today, 8 p.m. Okay. If you remember this morning, and I know all of you aren't on pre-market prep, but please check it out. Please check it out live every day. So 8 p.m. was an amazing example. Within a matter of minutes, I went from that being the number one buy in pre, sell in pre, get aggressive in pre-market to we put the brakes on, screeching halt with the brakes because of the chat pump. Okay. And right now, the chat guy, he's ice cold. Like he single-handedly assassinated the Chinese low float sector yesterday. He comes in bleary-eyed, wakes up at like 10 o'clock, piles his sheep into and this is yesterday, okay, Tuesday, piles the sheep into every single one of these. And what happened? They all got destroyed. Now, this is another intricacy thing. And that's why I think it's so important to be on pre-market prep, because sometimes he's really hot. Okay. Sometimes he's really hot. And sometimes we're like, oh boy, chat pump in our number one play. Let's go. So understand two things. There's a limit to how much I can do in a matter of minutes, matter of seconds. Now, that's why I use the acronyms. That's why I use the shorthand. Let's go back to the original question. Is there a differentiation between the weak open red to green and a 945 dip and rip? So understand the biggest delineation is the weak open red to green is a multi-day pattern. Okay, it's a multi-day pattern. The dip and rip is designed for day oneers. Okay, day oneers. And understand, if you join pre-market prep, you do get the ebook that lays all this out. Okay, and I get these questions a lot. That's why I wrote the ebook. It's incredible. Check it out. Okay, but the week open red to green is for multi-day moves. Okay, Adam is a great example. What did Adam do today? Too many stocks. Oh, God. Adam's at 10. Ah! Oh, beautiful. Adam, oh my gosh. Check out the weekend watch list. Alex will probably link it to you. The weekend watch list feature was Adam. It's got to be on the YouTube. It's on the YouTube. Every single day for a week, we've gone over the week open ready green on Adam. Now, why? Why? Okay. It's an earnings winner. It's a hot sector. It's a former runner. It's a air quotes quality stock. Oh my God. Look at that. So it pulled to the low eights or mid eights right at the market open, went green at $9 a share at 9:45 a.m., hit 1013 and closed at 980. And it's going to be, it's a week open ready green again tomorrow. Oh my God. This is like, so bring up the chart pattern of Adam, ATOM, going back to last week when earnings got released. And this is like about as perfect of a week open ready green as they get. Now the dip and rip. The dip and rip is specifically designed for air quotes, the worst stocks in the world. Okay. And the reason we trade that pattern is when the stock runs up and pulls at the open, that's where the shorts pile in. Okay. Every dip and rip is designed for the worst stocks in the world. Please write that down. Okay. These are not swing trades like an ATOM. These are not even like all day holds. These are like quick in and out based on key levels. And the reason that pattern plays out is because shorts pile in when the stock pulls at the open. Okay. And they feel safe as long as the stock is below the pre-market high. Okay. The significance of the pre-market high is that's their risk level. Okay. That's the point where they're going to stop out and they're going to panic buy. Now, if this terrible, disgusting stock pulls at the open, loads them up, and then bases, and then starts trickling back towards the high of the day, we know they're going to exit at the high of the day if they're smart. And we also know breakout buyers are going to come in. And we also know that fans of the dip and rip, which hopefully all of you are going to be in as well. So think about what is happening right there. It's a term I use, which is a little bit of hyperbole, okay? But when we talk about the entry on the dip and rip, the concept is, air quotes, everyone is buying. Like everyone's buying, okay? The shorts are buying because they're buying to cover, remember, if you're short a stock, you have to buy to close your position. They're probably buying with market orders because they want out. Breakout buyers are buying. Dip and rip buyers are buying. People that just see some big percent gainer hitting their scan, they're buying. So it's like everybody's buying. So one of the biggest things I constantly teach and preach is understand how to recognize supply and demand imbalances. And when you got a dip and rip and some crappy, disgusting piece of trash, low float stock, they don't all work. But but when they do, when they work, oh man, it's straight up and just makes it so easy to exit. So hopefully that helped. Jay says, I traded EVLO Wednesday morning. No better way to avoid this. Okay, so EVLO last Wednesday at 25. I got in about 25 cents with a 24.95 stop loss. So that would have been about 9:45. Well done. Okay. So I'm guessing what you're asking, and I'm doing this on the fly. I'm guessing what you're asking is like, you stopped out and then the trade ultimately worked. Because I'm assuming you took it at 9:45, it pulled back, stopped you out, and then it ultimately worked. Okay. And this is always where, and I get this question a lot, and it's a good question. But like the struggle is, listen, EVLO is absolutely trash. You have to respect your stop. And I understand. I understand, guys. It's very frustrating to take the stop and then it rips to 32 cents. But what was the name? Jay. Jay, look at where it closed the day. Okay. It closed the day at 18 cents. The next day, it was at 14 cents. And then the day after that, it was at 11 cents. And then it was at, so this will constantly haunt you. And it haunts me to this day. Nothing, well, there's a lot of things that are frustrating, but one of the most frustrating things is to do your due diligence, follow your process, do all of your analysis, pick your levels, plan the trade, execute the trade, actually enter, get stopped out, and then see the stock explode what? 8 cents on a 30% higher. But you have to understand you can't play this coulda, woulda, shoulda game. And sure, you could have broken your stop and waited, and then it spikes to 32 cents and you'd be so happy. But vice versa, you could have broken that stop and the stock could have collapsed at the same time. And it, again, after hours that day, it was at 14, 15 cents. So you would have been staring at like a 50% drop had the stock done exactly what it did into the close. So one of the biggest things that is very difficult to accept is you can make the right decision and you can make the right execution and you can trade the right stock, and sometimes price action just stops you out. It's a lot like, I always hate gambling analogies with stocks, because I think trading, if you're doing it the right way, is a lot different than gambling. But like sometimes, man, you're just sitting there, and I don't gamble, okay? So I'm going to screw this up. I've been to Vegas like 15 times in the last decade, and I've never gambled once, okay? It's not my thing. But like I have a basic understanding of blackjack. But it's like you're sitting there with a 20 and you're like, hey man, money in the bank. And the dealer hits and he has a 21. Okay. And now you can do two things at that point. You can have like this perfect hand and you lose. So you can do one of two things. You can like flip over the table, start throwing things at the dealer and punching the waitress, and like smashing things. Or you can recognize that, you know what? I had a good hand. He had a better hand. And I can recognize that, much like in gambling, as in trading, that losing is built in, and even sports, okay? I went with the gambling analogy tonight. Most of the time I go with sports analogies because I always hate comparing trading to gambling because, again, if you're doing it the right way, you're not gambling. Like the sports analogy is if you strike out at baseball, what do? Do you like punch the umpire, throw your bat at the pitcher, you'll run in the stands and start throwing down with the crowd because they're like, loser? Okay. I kind of like that. That'd be pretty cool, actually. But or basketball, if you miss a shot, then you just like walk off the court. Just walk. You're like, I'm done. I missed a shot. No, in sports, in so many things, you understand that missed shots and strikeouts, they're part of the game. Now, how you react to those moments of adversity or those bad things is what gets you to the point where you're successful over time. There's that Michael Jordan quote. Okay, the Michael Jordan quote is, I missed 9,000 shots, 22 times I got trusted to win the game, and so I'm kind of rambling a little bit, but I think this is just so important that I look at this chart last Thursday and I look at your time of day and I look at your entry and I can't find any faults. I look at your stop. Like, listen, I look at your stop and I'm like, he took a good stop. Now it ripped back, but and I wish, I wish I could tell you, Jay, that there was like some like little hidden bit. Like I wish I could give you some secret. Like there was some secret that would have told you, oh no, not this time. Oh, I'm not going to take my stop. This time I'm going to hold a little longer. It's not there, okay? It's a very similar discussion and it sucks, okay? This is the last point. It sucks losing money, but it's built in. It's built into trading, okay? And if this is the last point and I will move on. You have to just understand that you will lose money. Now, your job is to keep those losses small so that then when you nail the next one, you make back your losses and then some. That's risk management. I see people trading low floaters only 500,000 around. No. Kieran, I don't care what the stock is. And we had a lot of those today. Like Kieran, I'm guessing you saw there was, what did we have? We had like 2 or 3 very low volume runners today, and they all gave back like the whole move. Like HCDI, right? Yeah, HCDI. Now listen. I understand, HCDI ended up trading some volume, but like it goes from 4 to 9, low volume, yanks back to 6, spikes to 14, drops to 9, spikes to 14 again, drops to 6, and now it's at like 681. So that kind of liquidity, man, I don't care if you're trading 10 shares. It is impossible to trade something like HCDI. Now, listen, I'm sure there's people that got lucky, okay? And if you bought HCDI at 7 and you sold at 13.50, congrats. I tip my hat to you. But it's just like you in a halted up, halted down. So that's why I will constantly tell you have to trade liquid stocks. Again, HCDI, and there were more. There was like 3 of them today. Okay, great if you did well, but good luck repeating that tomorrow. And that's kind of one of the biggest things that when I talk about these chart patterns, the top 11 chart patterns, my ebook is the top 10 trading patterns, but the day 3 surge is kind of in the addendum. Okay. I need to relaunch the ebook, the top 11 patterns, but every single one of the patterns in that book in that webinar, in the core curriculum of what I teach. Every single day, there's one or two stocks that fit those patterns. Okay. And that is what allows you to become, a consistently profitable trader. But like something like HCDI, it's just like every once in a while it comes along and, you do well today, but you can't trade this liquidity. It's a mess. It's a mess. I mean, you're probably going to get stopped out. And if you made money, you probably got lucky. No offense. Liquid stocks, liquid stocks, liquid stocks. IMGN was my number one stock this morning. Sent out in pre-market to the 11 level for the entry. We talked about 12 plus for the goal. Actually, let me bring it up. 9:34 a.m. IMGN, signal 11, target 12 plus, stop loss of 1049. So right there, we got 3-to-1 risk to reward. I then break it down in the thesis, a leader in the expanding field of antibody drug conjugates. I'm too dumb. For the treatment of cancer. It's cancer, okay? They announced the positive top-line data for phase 3 confirmatory Mirasol trial. Okay, anyway, about 10 minutes later, right there, IMGN broke 11 and went to 13.30. $1 plus a share past the goal. And guess what? And actually, this is so write down IMGN. I'm going to end the webinar as I began. This is I always like to not, I try and avoid using like perfect or like, that's why I always say like textbook. You want a week open red to green? You got a stock with very positive news, ridiculous volume. The average volume is 3 million shares a day, traded 105 million shares a day. And this is a $13 stock. Think about that. Like we see $1 stocks that trade 100 million shares. This is a $13 stock that traded 105 million shares today. Also, it's full of shorts, and I am baffled. So I've been lurking in some of these short seller rooms lately. Shh. You rat me out. It's like the mob, man. I'll find you. And like this thing's at 5-year highs. Price upgrades across like there's all day long. Analyst upgrades, 5-year highs, cancer news, trending up all day, and people are guessing the tops on this thing. I'm like, what? And when I say guessing the tops, they're shorting this thing. I'm like, what? Of all the stocks, of all the 19,000 stocks, you're shorting a cancer play at 5-year highs, trading like 50 times average volume, and it's just grinding higher all day long. Like, what are you like short MULN? Okay. MULN announced a reverse split today. There's like 18 videos on the Stocks Trade YouTube of me begging people that MULN, Mullen Automotive, is the worst stock in the world. But people are guessing the tops on a cancer play at 5-year highs, trading 50x volume, that's getting analyst upgrades all day long, holding V-Wave. It's like it's the worst short setup in the world. And guess what? It closes at the high of the day. And guess what? You want a week open red to green tomorrow? It is IMGN. And it could, listen, I think that if this thing gaps down tomorrow, if it gaps down tomorrow and attracts even more shorts, you're talking all-time highs, baby. All-time high is $20. Yeah, 2006. So there's your week open red to green. Okay. Second, check out pre-market prep. Would love to see you in the morning. We're going to be talking every single dip and rip. Okay. So what's great about the week open red to green, it is a multi-day pattern. You can be ready in advance. ATOM and IMGN. Dip and rips are day oneers. Okay. Day oneers means we got to get together and we got to be on the webinar together.